evening, all. Ira Epstein of Linn & Associates with your metal market update, and this is for Monday, the 25th of January, 2021, about 5:35 p.m. Central Time. Our website was down today. I got ill from my first vaccine shot. Ill isn't the right word. I got very tired. I had the shot Wednesday afternoon. I swear to you, up through yesterday evening, I was sleeping Thursday, Friday, Saturday. I'm a normal sleeper of 5 hours, 6 hours. I was sleeping 20 hours to 18 hours a day. And just even when I was up, I was like in a fog. Now I'm back to normal. It took me a while. That was my reaction to the shot. So be aware that I'm just sharing that with everybody because I'm sure everybody reacts different to it. But I have heard, in fact, I had asked and they said you could have that reaction. Some people get it. I certainly was down for the count. It is the reason I didn't put out weekly updates for you. I was here, my subscribers, you know I did put them out. For my paid subscribers, I swear to you, I put them out and I went back to bed. That was pretty much it. But as you can see from my energy, I'm back to normal right now and very anxious to be in the swing of things. In the stock indices, you know, you've got to keep your mind open to the fact that what if we get one of these variants? You know, we got the UK variant, this South African variant of COVID-19. What if one shows up and they don't have a booster shot or something that works? Just a thought. Not telling you that's going to happen. Just a thought. In the metal markets, they're acting okay. They're not running one way or the other. We have the FOMC meeting this week. We've got a lot of other things going on, a lot of economic data coming out. Energy prices held on. Bonds and notes have rallied fairly sharply over the past 5 days as they get ready for the FOMC meeting that begins tomorrow. And I believe we have Wednesday, if I'm correct. That is when the Fed meeting happens. We'll get the statement and, of course, Mr. Powell speaking. Late in the day today, just maybe 20 minutes ago, Janet Yellen got Senate confirmation. Welcome. She's certainly an able-bodied Treasury Secretary. Welcome, First Lady, to hold that position. Nice honor. All right, as we take a look at the metals on the weekly area chart of just closes, I'm having trouble with this thing. I don't know why it's in a delay, but it is. Here we go. It'll stay like this now. We're still under the 18-week average. Here's my definition of bias, and bias is a filter for trade ideas. When the market is under that, whether it's a weekly or a daily chart, a monthly, your bias is down. It sort of filters out other things that might be bullish. Be over that number, I have a bullish bias. So right now I'm still in the bearish bias camp. The next thing I look at when I look at the chart is where is the action? Well, you can see from this peak to that break low, we're now just gyrating back and forth here, not doing a lot one way or the other. When I look at the swing line study, with today's action, I now have higher lows and higher highs. So for the first time in a while, we've turned back to an uptrend in the swing line. Again, I want to go to my bias. Where's that 18-day moving average of closes? The market is under it. So I have the bias down, the swing line up, the two fight each other. I've been pointing out to you that this 200-day average seems to be a number that a lot of traders look at. And the market seems to hit it each day. Do you see that yourself? I mean, to me, it's evident. You didn't hit it on this day, but look at all these times it's hitting it. Now, it's acting as a resistance barrier because basically you've been staying under it, and the 18 and the 200 are trying to roll towards each other. I don't know what to make of that, but it's just an observation on my part. When I look at Bollinger Bands, about a week ago, you got to the lower Bollinger Band, and from that 18 level, you know, right in this 1810, you really rallied up about $60 or so. Market gave the people that were short a chance here and here to come out. If you don't take it, bye-bye. Markets often leave you in their dust. Does the market always have to turn on it? No, but I do pay attention to it. In the slow stochastics, which is the momentum index, it is flat. Now, I believe that momentum leads price, not price leads momentum. And it being flat tells me that the market's probably in a holding pattern going into the FOMC meeting. Could be wrong in my interpretation, but that's what I think. As for the gold-silver ratio, gold still has the edge on silver. Again, if you look at the difference, the ratio prices, they're over the 18-day moving average of closes. That gives it an upside bias. Well, the higher the numbers go, the more ounces of silver you need to buy 1 ounce of gold in a perfect commission-free world of the two. I happen to like silver more than gold if the economies of the world are going to come on board, get past the COVID situation, and start firing up their full engines, which I think is going to happen. In the silver, you have an uptrend similar to gold. You have higher lows, higher highs, and here too, you are trading under the 18-day average, so the bias is down. Instead of the 200-day being the key to this market, it seems to be caught in the green, the 100-day average up to the red, the 18-day average of closes. I'm going to call that market neutral. In the copper market, does it get more neutral than this? Look at how you're just laying here day after day against that 18-day average. So the 361.90 area seems to be where the market's hanging in. You don't have enough here to go one way or the other with the trend. You have lower lows and higher highs at work. That is not a trend where I go to school. The market's caught between the Bollinger Bands as well. When you look at the platinum market, it's still in a bullish scenario. Bullish, yeah. You got bullish in this market, higher lows, higher highs, but the signal, when you got the bull signal the way that I teach charting, it came in right from here up to there, and it has since fallen back. Pretty hard to do it. A wild swing market. Momentum trying to drift lower with prices down here, but it's still keeping the bias up. The trend is up. You'd be wrong if one is long if you took out the low back here. So that's under the 1075 level, and from where you're at, that's almost $30 away. Then we get to the palladium market, which is still in the bear camp. This market just is caught between, I think, these wide swinging Bollinger Bands. I want you to look at the 100-day average. I pointed it out last week, and I'll continue to point it out. Today, not tonight, let me get to today's action here. You can see how the market probed for the first time the downside. You got to the 2320 level. 2318.75, let's call it, or 70, is the lower Bollinger Band. So you went into that zone, you stayed there, and tonight you're doing what? You're still under the 18-day average. I'm sorry, under the 100-day average at 2358 or 2338. The trend is down. You are oversold. If you hit the lower Bollinger Band, just like you bounced today, I would look for a little bit of support against that. As for the dollar index, we have a pattern of higher lows, higher highs. If you get my morning subscriber video, this morning I said I thought the pros were going to buy this market at 90.13 with tight stops under 90.03. Pointed it out to my traders, and then I told them, I said, if you get under 90.03, they'll probably go short. That was exactly what I said. If you're a subscriber, you know that's what I was saying. It turned out to be pretty good advice as the market went back to the upside. We'll see what it does as we get through this Fed noise, because that's going to be, to me, the important thing. But I want you to remember these stock swings today. If you were watching markets, they were just going crazy. A lot of people getting caught with these, what they call the Robin Hood traders, as they go after companies as a group apparently, and they just drive stocks away from the fundamentals. Whoever said that fundamentals have to work day after day? I don't know anyone that said it. But with the volatility that we're getting in these stock indices, you get two things. You get, number one, a lot of risk. You get a lot of opportunity. Why not cut it down and trade the 1/10 size? They are extremely popular. They track with the big size contracts. They trade at 1/10 the size. We give you a commission of $1 a side. Come on, at $1 a side and you're flipping back and forth in these markets, you can trade it day trade, you can position trade, you can build positions in them. It's one of the ways to go. To get yourself started, simply call my staff. They'll work with you. They'll set you all up. You can even go to find out more at our website, but type in the word, not only the website.com, but the word micro after it. That's how you get to see everything about this. I'm Ira Epstein. I'll see you in the morning. Take care.